Debits and credits task. You've got 30 seconds to go through each question, and then I'll go through and give you the answer. So, question 1, if our bank account is going up as part of a financial transaction, this is a, pick which one, A to D? Okay, this is B. Now, our bank account is a money in item. Money in item, it is going up, and therefore that will be a debit. That's the answer for number 1, B. Question 2. A purchase expense is a, okay, so a purchase expense is a debit because expenses are deducted from money that we ultimately give shareholders. So shareholders is a money out item in there, so it's a money out item. It's been reduced because we got these expenses, which ultimately we would give to the shareholders, and because that's going down, it's a debit. So money out items that go down are debits. And so that is C. Question 3. Another phrase for more than could be. And the answer to that is B, greater than. Question 4. A reduction in trade receivables, the amounts owed by customers, is a, it's a credit because a trade receivable is a amount owed by customers is a money in item. It's going down, so it's been reduced. So a reduction in a money in item is a credit. So the answer to that is C. Question 5. The amount a shareholder pays into a business is a debit or credit in the capital account because of. And the answer to that is B. It's a credit in the capital account, and that's because it's a money out item. The shareholders will want that money back in the future, and an increase in the money out item is therefore a credit. So that is B. Last question. The fundamental accounting equation is. And the answer to this is D. And the reason why it's D rather than either B or C is assets equals liabilities plus capital. And the reason why we do it like that, rather than you might sometimes see it being as assets minus liabilities is equal to capital, is because it puts all of the assets on one side, all of the money in items on one side, and all of the money out items on the other. And that allows you then to have money in is equal to money out. Increases in assets is a debit, reductions in assets is a credit, increases in money out items is a credit, reductions is a debit, and it also has a nice lineup of the T accounts in there with debits and credits on either side. So that's the reason why at level 3 it will be far easier if you learn the accounting equation as being assets equals liabilities plus capital. So let's stop the timer there and let's see whether we scored all about 6, and we did score 6 out of 6. Good luck. Thanks for listening.